Welcome. I am Ann Muley, the Associate Director of the John L. Weinberg Center for Corporate Governance at the University of Delaware. Prior to joining the Weinberg Center, I was Chief Corporate and Securities Attorney, Corporate Secretary, and Chief Governance Officer of Sunoco. Today, the Weinberg Center is pleased to present a discussion on blockchain technology, and more specifically, the groundbreaking Delaware Blockchain Initiative. Now, why is it important for you to know about blockchain? It has been said that blockchain technology is as significant to companies and society as the birth of the internet. Blockchain technology will be a game changer, and it will totally transform industries. Blockchain technology is a disruptor, and companies will be losers, and other companies will be winners. Boards of directors need to be aware and know about blockchain technology, and the time is now. Today, we are honored to have 3 individuals with us who are leading Delaware's blockchain initiative. I would like to briefly introduce each of them. Please note that complete bios are on our website, and they're really quite impressive, so I urge you to read them. First, we have Andrea Tinianow, a Delaware lawyer and director of Global Delaware, and, significant for the Weinberg Center, a member of our advisory board, a very supportive member. She also leads the Delaware Blockchain Initiative, which was conceived by Global Delaware.
Yes.
Caitlin Long is chairman and president of Symbiont, the market-leading smart contracts platform for institutional uses of distributed ledger technology and winner of Waters Technologies Award for Best Distributed Ledger Project in 2016. Of note, Markets Media awarded Caitlin its 2016 Women in Finance Award for Excellence in Blockchain. And last but not least, Marco Santori is a partner at Cooley LLP and leads Cooley's FinTech practice and is an authority in the law of blockchain technology. He is the legal ambassador for the Delaware Blockchain Initiative, an advisor to the International Monetary Fund, and the drafter of the New Jersey Digital Currency Jobs Creation Act. Of note, Marco has been called the Dean of Digital Currency Lawyers by an American banker journalist. I would like to begin our discussion by asking Marco to provide a plain English description of exactly what blockchain technology is.
Sure, happy to do it, and thank you for having us here today. It's easy to give a description of blockchain technology that gets into the weeds very quickly and gets into technology very quickly, but at its surface, I just want you to imagine a piece of paper. Not any old piece of paper, but a magic piece of paper, and somebody halfway around the world has a corresponding magical piece of paper. It's magic because you can write down anything you want on that piece of paper and imagine that it would just show up exactly as you wrote it on the same piece of paper that the other person had. What would you do with that piece of paper? I mean, you might do all kinds of things, but what people have done with it today is create a ledger. But why? Why is it magic? Well, today you can do those kinds of things with a central intermediary. You can both trust a bank. And if you trust the bank, that central intermediary can make sure that anything that's written on your ledger is written on the other person's ledger too. Maybe it's a money transmitter. Maybe it's a central server that both clients trust. But what blockchain does is all those things without that central intermediary, without that central server. It's really incredible, and it does it by way of a computer protocol. So just like you might use SMTP or POP3 for email, you don't think about that stuff. You just hit send on the email. The same thing with blockchain technology. Blockchain technologies are computer protocols.
Well, thank you, Marco. Now, Andrea, can you tell us about the Delaware Blockchain Initiative?
Absolutely, Ann. Last spring, really about a year ago, then Governor Markell launched the initiative, a big conference, a big blockchain conference, and he did it with really 3 objectives. 1, to demonstrate his support and the state's support for the technology. Second, it contained with it a commitment to use the technology in state government. And third was a request to the Corporation Law Council in the state of Delaware to please amend the corporate law so that to expressly authorize the issuance of shares on the blockchain. And with that announcement, many things started happening. And over the last year, we've seen a lot of excitement, and there's been a lot of interest, and we are moving forward with these commitments.
Now, Andrea and Caitlin, can you discuss who is providing the technology for the initiative? Andrea, would you please start?
Well, I can make that. That's an easy one.
Right. That was a softball.
That was a softball. Symbiont is providing the technology, and you know, Caitlin is the president and chairman of the company. But I can tell you that Symbiont is the market leader in a class by itself. They've developed their proprietary technology coupled with a smart contract, and we haven't talked about that. But it really it's a private it's a private blockchain with the highest security protocols. So we're thrilled to be partnering, frankly, with Symbiont. So
before we go to Caitlin, just could you clarify for our audience the difference between a private blockchain and a public blockchain?
That's really easy.
Yes.
So most folks have heard about Bitcoin or the Bitcoin blockchain, the blockchain underlying the digital currency. And anyone with a computer that downloads the software can participate and be a part of that and take advantage of that technology. But not so with Symbiont, because all the parties that participate on that distributed ledger are vetted and need to be accepted and work with Symbiont. So that's a big difference.
Big difference.
Yeah, absolutely.
Okay, Caitlin, tell us about Symbiont and your involvement in the Delaware initiative.
Yes, thank you. First of all, it's an honor to be here and involved in the Delaware Blockchain Initiative. We were one of the original partners to the state of Delaware to provide smart contract technology, which, as Andrea alluded, hasn't been defined yet, but it's a very important concept because what that does is automate workflow. So to Marco's terrific example, where you have different parties seeing the same information at the same time and trusting that it's valid, not needing an intermediary to disclose that information, the smart contract that runs on top of that special form of database called a distributed ledger automates the workflow. So all of a sudden you can have multi-party transactions immediately settling and not require all of the different institutions to maintain their own copies of data and reconcile against each other. And there's an awful lot of that duplication out there, especially in the financial services industry, also in the healthcare industry. There are lots of places in the economy where different organizations maintain their own sets of data and reconcile with their counterparties, and that is what this technology will enable the automation of. Now, for the Delaware Blockchain Initiative, we started with the Delaware Public Archives as a beta test, if you will. That was one of the
and it's still in progress.
It's still in progress.
We're working on that now.
Yes, that Governor Markell wanted the state of Delaware to use the technology, and the Delaware Public Archives is a great place where we put smart contracts into place for document retention. And so the smart contract will enable the documents to comply with the laws with regard to document retention and destruction, very importantly destruction as well. After a particular date when a document has to be destroyed, the technology will render the document unreplayable. And we're also working on smart UCC filings next, and then smart registrations for incorporations, Delaware statutory business trusts and LLCs as well.
And that is to issue shares on a blockchain, on a distributed ledger.
Yes. Wow, it sounds like you're quite busy.
We are busy, yes,
very
indeed.
busy.
That's great. So I would like all three of you to discuss why Delaware is taking a leadership role with respect to this technology, what Delaware hopes to achieve, and what kinds of new services will the DBI deliver. I know you touched on a few of them.
Well, Delaware, why is Delaware taking a leadership position? I think, Delaware is an innovator. We are the first state. And frankly, when we really started to learn about this technology, it's not like we said, oh, we've got to put shares on that blockchain. We just wanted to figure out, how do we use this blockchain? How do we use the technology? And so very quickly we started thinking about, well, how can we get started? How can we really use this technology, just not for the sake of using it, but to really derive some value and meaning? And that's really why we started with the public archives. And that, as I said, that's in progress. And other services will around the smart UCCs, and that's something that's in the works. And we anticipate that that will bring a lot of value to especially the lenders who are filing these UCCs.
Every so often, I remember working in corporate America,
Absolutely.
some poor paralegal would have to go down every, was it 5 years and file?
Oh yeah, and
so
there's so much risk and liability
Yes.
associated with that, because if a lender's loan is
Yes.
greater than 5 years and you forget to, you only have a
Yes.
6-month window. So we're trying to, we always want to create more value for our clients. And that's really what this is about. How can we deliver more? But I will tell you something, that since we've been out in the world and talking about what we're doing, we're actually being approached by private actors in the private industry who see Delaware as a great platform for solving problems across borders. So we don't really see this as a Delaware blockchain. We really see this as a platform to work with others who want to do things more efficiently and more cost effectively, and to reduce risk, frankly.
Yes. Did Caitlin or Marco have any other points on that?
I just want to say very generally, I think I would love for you to speak to some of the specific examples of what blockchain technology can do in Delaware specifically, and for the financial service world more generally. But what I've seen in Delaware is being true to the approach that Delaware has always taken with the law, and that is an enabling approach.
Exactly.
So instead of being prescriptive with new laws and demanding that companies and private actors act in a certain way, they've looked at the markets, they've studied them, they've learned what works and what doesn't work, and tried to codify that.
Right, and I don't know, we have, it looks like there'll be amendments that will be brought to the, introduced into the General Assembly. It may even be that by the time this is out there, we'll all know the results, but we're very excited about that the Corporation Law Council did take Governor Markell up, and they did draft amendments expressly authorizing the issuance of shares on multiple databases, I think is how they refer to it, but with the intention that shares could be issued and maintained on a stock ledger, on a distributed ledger. So we hope that they will be passed, and that would be very exciting. Yes, exactly to your point, Martha.
So Caitlin, can you talk about why might a company choose to incorporate on a distributed ledger instead of on a piece of paper?
That's a great question, and for this audience watching this video, I think that's probably the question. Why would I have the benefit to do this? And there are several benefits. One of which is just better record keeping, because distributed ledgers, they're append-only databases, and therefore once the data is on the ledger, it can't be removed from the ledger and it can't be changed. Again, there's that trust aspect. The data is immutable, so it's a perfect audit trail. So it's a great place for corporate governance documents to be stored on a private basis. Some investors, for example, want evidence of valid board authorization for corporate actions, and so there's a perfect place to store those documents for a company's investors. Companies would be able to communicate directly with their investors. Right now, especially for public companies, that they have to go through intermediaries to do that. They would always know who is invested in the company, so there's a valid cap table. That's especially true for private companies, where it's not that easy to keep track of who's in the cap table. One of the things Delaware itself has experienced is a tremendous number of companies that have challenges getting a certificate of good standing right before going public because of inaccuracies in the cap table, an inaccurate number of shares filed, authorized in the state of Delaware. And believe it or not, we're aware of a couple of examples where public companies actually had that happen. There were more shares listed on the 10K than were actually legally authorized in Delaware. So mistakes can happen. And I think from a corporate perspective, we know of public companies that would love to have the number of mistakes in misdirected dividend payments reduced, as well as accuracy in proxy voting. We can talk about that in a little bit later, but the SEC actually has said some things that essentially say we don't have one-for-one voting in shares in this country, in part because of the way that shares are owned in this country and for publicly issued shares. The Delaware Blockchain Initiative, registering on a distributed ledger, can fix all of those issues and make a corporate secretary's life so much easier.
Too bad it wasn't around when I had the job. Now I'm in academia. But there's a lot of people, a lot of friends I know, it would make their lives a lot easier.
Sure.
But you are on a roll, and since you're talking about accidental overissuance of shares, can you talk a little bit about a real-life example, the recent Delaware Dole case?
Yes, Dole Food made the news. Many of your readers probably are aware of it because there was a very odd thing that happened that came out in a class action litigation opinion from a Delaware Chancery Court judge, and he defined that there were 36 million shares certified in a class, and at that time the acquisition had already happened, so there were really only 36 million shares outstanding, and there were 49 million valid claims filed for those 36 million shares. And by that, they meant that all 49 million were supported with brokerage statements that showed all of those shareholders owned those shares. How did that happen? A lot of it had to do with unsettled securities trades. About 10% of it was naked short selling. These are issues that the public securities markets come across, and we've been at a T+3 settlement for years for securities transactions, and it was the unsettled transactions that caused that accounting system to go so haywire. That was admittedly an edge case. Normally it works a lot better than that, but it's not the only one. And in 22 years on Wall Street, I saw multiple examples where the system didn't keep perfect track of who owned what. We alluded on proxy voting, the Yahoo 2008 proxy case. A shareholder suspected that the vote count wasn't correct, asked for a recount, and found that 20% of the votes were miscounted. Those kinds of situations, again, edge cases, but they're unacceptable and they shouldn't happen. And the shares being issued and tracked on a distributed ledger would prevent all of those mistakes from happening.
Well, thank you. Marco, can you talk about some of the benefits of companies knowing who the ultimate beneficial owners of their shares are?
Yeah, this is the same thing that Caitlin was talking about. From a corporate governance perspective, there really is no more important question than who owns this company.
Yeah.
Right?
Indeed.
And what we've seen, what the Delaware Chancery Court has seen, and what we've heard justices say is that the financial system is clogged, and blockchain is the plunger, right? That's one of the great.
Yes,
that's one of the great quotes,
yes,
and I think it's right. I think it's right. If you look back to what got us into this incredibly complex situation of securities entitlements and net settlement, it all came about because in the 70s computers really weren't that powerful. But now I have a device in my pocket that can probably run a significant chunk, if not all, of the U.S. financial system in terms of settlement and clearance. But it wasn't around back then, and sort of that dual system that took hold is still with us. Meanwhile, it's been leapfrogged so many times by systems that can track settlements, can track ownership, can tell a company who owns it, can tell management who they're supposed to be responsible to. And that technology is now at our doorstep. I think it's a tremendous development that Delaware is leading the charge.
And I will say, in the governance area, increasingly over the past 5 years or so, it is very important for boards to engage directly with shareholders.
Yes.
That's happening more
trend.
and more. It's a big trend, getting bigger every day. Go back 5 years, and not many companies were engaged, not many boards, let alone companies, were engaging with shareholders on the governance side.
Sure.
And now that's so important. So to know who the actual owners are is really critical.
And yeah, as a lawyer, I won't forgive myself if
That's okay.
if I didn't say.
We're all lawyers.
Yes, we're all exactly.
So feel free.
Full disclosure. I wouldn't forgive myself if I didn't say it. Under certain circumstances, it is actually required. Beneficial ownership, reporting, knowledge of this thing is required by a lot of parties, and it's difficult, if not impossible, by some parties to make that reporting, to make that call, to have that understanding because of the system that we have in place today.
Yes, I posted an interview with the CFO of Seagate Technologies on my personal blog, and he talked about the difficulty as a CFO of a public company to figure out who owns your securities and how when he asks the DTC for a list of securities owners, it's inevitably out of date, which by nature it is because of the delays in settlement, and not accurate. And so, but yet that's the only place where a public company can go to get the list of securities owners. There are some quirks in the fixed income market, like Regulation AB2, which the SEC put in place to try to facilitate communication between bondholders in the mortgage-backed and asset-backed securities markets. And it's not possible to comply with that because the trustees of those bonds don't have access to the shareholder list, to the bond owner list. It's not physically possible to comply with Regulation AB2. So we have these quirks in the law, and actually in some ways Delaware corporate law is inconsistent with federal securities law, which has this indirect or nominee shareholder ownership structure where the record owner is not the beneficial owner. Delaware law contemplates that record owners are the beneficial owners. And what this technology will enable is the remarrying of beneficial and record owners again, which will solve all of these problems.
So, Caitlin, you spent 22 years on Wall Street at various investment banks as a managing director. So you're intimately familiar with Wall Street and the finance industry. What sort of impact do you think blockchain technology is going to have on Wall Street and the finance industry?
Well, I think it will significantly reduce the duplication in the back office of processes. For example, in the syndicated loans market, my company is providing a prototype to 19 financial institutions. And in that market, it's notorious. There are 25 million faxes a year sent between the banks. And at each bank, there's someone pulling faxes off the fax machine, taking the data and coding it into their system, and then they go and reconcile it. That's just needless duplication that doesn't really give anyone any economic benefit. And so there was a desire to go ahead and say, let's share the same data and be able to cut out all of those costs, as well as in that market, average loan settlement is 18.4 days, according to the LSTA, which is an industry group last year. And we think we can get it down to 2 or 3 days. So
freeing up a lot of capital.
Freeing up a lot of capital, bingo.
Yes.
Yeah.
Wow. Andrea, do you have anything else you want to share with us about the Delaware Blockchain Initiative or about your experience? I know you've been...
It's been tremendous. It's been a tremendous experience. The state is so supportive and enthusiastic about what we're doing. And like I said, they're looking to innovate. And we're thrilled to have such great partners, and of course the corporate center, you know, the Weinberg Center for Corporate Governance is a great partner for the state. So we're just, you know, full steam ahead.
I know you're really working hard.
Yes, we are. We all are, and we're very excited about the work. And you know, public archives, that's groundbreaking. That will be, I think, the first state agency that's deploying the technology. I don't know if there are any others, but that's
right.
That's so exciting, and we can't wait to get that underway, and smart UCCs after that, and you know, and the world really.
Yeah, wonderful.
World, right?
Any parting comments from you, Marco?
Yeah, I think that I think it's difficult to overstate the impact that this is going to have in the world of blockchain technology. I think it's difficult to overstate the impact this is going to have in the world of corporate law. I think that these developments are probably the most important thing to happen in each of those realms since the creation of the uncertificated share. I mean, this is important stuff. I mean, if you think about it, you know, what, 600 years ago, you would meet under the buttonwood tree and you'd exchange a paper share. And you can fast forward, and not a whole lot has changed.
So true.
Not a whole lot has changed, and I think that this really has the power to change quite a bit of what we do. I really do.
And Caitlin, any final comments from you?
Well, I think, Anne, one of the interesting questions for the readers and followers of the Weinberg Center is, what does this mean for me? And a lot of companies who are in the role that you were in at Sunoco, your peers, are going to face a choice, which is, should I convert to a distributed ledger format? Of course, every company that's been incorporated in Delaware up until this date has been incorporated in the existing regime. Yes. But once that legislative session passes the new law, everybody's going to have a choice of of comparing the pros and cons of staying in the old regime, which puts you into this indirect or nominee ownership structure if you're a public company, or switching to the new regime. And I think there will be many little businesses that pop up. The registered agents are looking at some new services that will be offered to companies that do elect to either register or convert into a distributed ledger form. The Delaware Bar is all in a dit and twither over how we convert existing companies into this new structure. And so it will just be fascinating. You're going to have a choice. And the nice thing is we'll see how the market wins. Delaware hasn't prescribed anything. You actually have the option, if you're a corporate secretary, to determine which is the best way to handle your ownership of your company and administration thereof. And we think it's probably distributed ledger, but you'll have that choice.
Well, I know many of my colleagues will be watching this video and will be quite interested in following this as it evolves. So I just want to thank each of you for taking time out of your very busy schedules to join us here today at our Weinberg Center webcast. I think it's been very informative. This is a cutting-edge topic, and we are thrilled to have all of you here with us. For the audience, thank you for joining us. We hope you found this webcast to be of value. We would urge you to share it with your board of directors and anyone else who you think would benefit from listening in. With that, thank you very much and have a great day.